TFNN.
Hi everyone, Basil Chapman, the host of the Tiger Technicians Hour every day at 11 o'clock till noon Eastern Time, sitting in for Tom O'Brien. My pleasure to be here at the Tom O'Brien Show. And a very interesting day today, down 54 in the Dow at 18,868. S&P was down 3 at 2176. The comp index was up 18 at 52.94. The VIX index did rally. It's at 1375, but really it's in the 15s or higher that you start have to worry about market selling pressure. Most importantly, we've also got the IWM, which is the Russell 2000, which is making a high-level consolidation after a spectacular move from the 114.80s right up to the 130 level, gone sideways for 2 days. This is worth something watching because it's essentially broken out in the weekly chart and the monthly. If you're looking at my charts, what you will see is this Chapman wave notation. It's actually a very simple technique. Let me just show you right here. Drag this over. Basically, what we're looking at is from a declining price point, you identify a low and merely start counting each successively higher peak. You want to get to 4 higher peaks. That's where you've gone from a buy signal to a buy mode. I alphabetize them, uppercase A. Next one is a higher B, then a C, and then a D. And at D, the 4th highest peak, other things can happen. It can go even higher. So let's just look at this. Why? Because within the context of the markets that we're looking at here, this breakout in the IWM, the Russell 2000, in the monthly chart really puts it at B, and I'm going to explain a bunch of things as we move on, but let's just finish the numbers. You've got to look at the New York Stock Exchange, New York Stock Exchange, NYA.X, here we go, and that is in a little leg B in the daily chart, but it's really lagging, and the lagging aspect is really very important in what I'm looking at here. That's essentially looking at the NASDAQ stocks, the very largest of the high beta stocks in the NASDAQ, like an Amazon, not doing all that well right now. We're going to, in a moment, we'll look at Amazon in relation to, with the holiday season coming up, in relation to the RTH, which is the bricks and mortar sales force. That's the targets, etc. So we'll be there in a moment. And now let's go on. We want to look at gold. Gold is down at the 1224 level. It's unchanged basically. But what's really important about gold, you see this is the daily chart on the left. It spiked up to the 1339-ish area and then plummeted down under 1224. And essentially what it's looking like, it's got an arch formation. And I wanted to point that out because if you look at the dollar, I've been talking about on my show for a long time and for my subscribers to my opening call, that we're looking in the patterns that form. Let me just move this over because this is what I typed in a long time ago. I drew this in, monthly chart. I said that this double cup formation, this U with another U right next to it, in the dollar index suggests that the patterns that we always look at suggest that there should be a new all-time high, a new recovery high in this multi-year dollar chart, and that it should go to, remember we're talking about those Ds, higher highs? Well, we've gone today to a leg D in the monthly chart. That leg D was so fascinating because back in, I think it was March of 2015, 100.39 was the high. It pulls back, makes this cup formation, and it goes to 100.51. This is a monthly chart, and it takes 7-8 months, and all it can do is go 12 cents higher to make a peak C and then pull back sharply. Well, it pulled back and went even below the low that was made back in early 2016. And then what happens? Sorry, 2015. And then what happens? It goes higher and higher. And I said, this is the pattern we're looking at. There should be a higher high and squeak to a leg D. And that's where the evidence, the weight of evidence is going to be. Is there enough price momentum to take this monthly chart much higher? Because that's what you need at this particular point. Otherwise, it's going to triple top. So what did we do today? The dollar went to 100.57, 6 cents above the high that was made December. Isn't that remarkable? You know, for us technicians, we just love the way the market works. And what is it in the weekly chart? Is in leg E, broken above. It's actually, we'll see on Friday, if it closes above 100.51, that's going to be really important. And I have no choice. I've got to call this at this point. I'm calling it a leg A in the daily chart. And what's fascinating about this is if you look at the relationship of, let's go to the EURUSD. This is the relationship of the euro-dollar currency pair. You see the pattern on the right? I drew this in as the lowercase h that goes to a lowercase m. There's a technique that I talk about in my CD introducing the Chapman wave methodology. This is slide 335 out of 476, my CD book. And this is the H pattern that can turn into an M-shaped pattern. Well, didn't we just see that right here when the dollar did the inverse upside down and went to the slightly new high? And now what we're looking at? We're looking at this H going to an M pattern in the euro-dollar currency pair. And I have to tell you, based on this, the MACD and the stochastic and the daily chart, it doesn't look like it's going to quite stop. It might stop for a moment, but it looks like, based on the weekly chart, with a very poor technicals, that it could go down and test the low that was made. This is the euro-dollar currency pair, the euro going all the way down to the 1.05 level over the coming weeks. And that would help the dollar. Now let's go to the TLT, which is the Treasury. This is the iShares 20-year Treasury bond ETF. So the daily has just made a nice little doji. I said to my subscribers to my opening call, I said, we've got to watch this real closely, because if you put the TBT doji that was just made in a trough B in the Chapman wave and the leg D to the downside breaking underneath the 200-period moving average in the weekly chart, this says maybe we're going to get a little bit of a bounce, but it's not looking good for yields, I can tell you that. So let's do the TBT, which is the inverse. And you'll see we made a little doji top. Now, all I can just make it real simple. At 38.78 in the TBT, down 67 cents. If the TBT closes in the next 2 days under 37.80, I'm going to call that an F, and I'm going to say we've got a short-term top in the yield rally. And let me just show you this $TNX.X. We're looking at the same sort of thing happening in the 10-year Treasury note interest rate. Spikes and gaps up, gone to a leg E. MACD, moving average, convergence, divergence, very strong. The stochastic, 91%, very strong. I think that yields are going to remain high. They can pull back a little bit. Yields look high. I'll be right back. This is Basil Chapman sitting in for one and only Tom O'Brien. It's the Tom O'Brien Show. And we'll be back straight after this message. Dow is down 54 and at 18,868. S&P is down 3.45.
If you're an active trader looking for that extra edge when it comes to trading,